Hi, welcome to Pennsylvania Newsmakers, and as always, thanks for watching. Well, it may be 5 months to the general election, but the Pennsylvania Senate and governor's election, guess what? They're both red hot. Pete DeCoursey will analyze then the important financial reform bill wends its way through Congress. How does that affect you? Pennsylvania politics in depth and in detail, and guess what? It all starts right now.
This is Pennsylvania Newsmakers, a fast-paced, unrehearsed weekly discussion with and about the leaders who shape your world. And now, here's your host, Terry Madonna.
Hi, welcome back to the program. Well, I'll tell you, it seems as though we're going to vote tomorrow with all the activity in the governor's election and the Senate campaign. But guess what? It's early June, and the candidates are out campaigning. Joining me is Pete DeCoursey, often a guest on Pennsylvania Newsmakers. He's the bureau chief with CapitolWire.com. Peter, I'm telling you, you've covered, I won't even ask you how many campaigns. I mean, the primary's just over, and both of these elections generally characterize them. These candidates for the Senate and the governor's race are off and running. 5 months to go.
This is so unusual, Terry. As you know, usually at this point, the candidates are not in the state of Pennsylvania. They're resting after the primary. This would usually be the week that they'd come back from some vacation, which, frankly, their wives would have insisted upon and their families would have insisted upon, and their campaign managers knowing they needed a sane candidate for 5 more months of slog. And the other thing that's been very interesting is, particularly in the Senate race, Joe Sestak, the Democratic nominee, who, really stunned me and many political observers by beating Arlen Specter decisively, 54% to 46% in the Democratic primary.
No one ruled out a chance that he would win, but we were stunned by the margin. That's your point, right?
I was surprised that he won.
Yeah.
I know you weren't.
Yeah.
I'll give you credit. Terry did call it earlier, but I was surprised. I thought Arlen would scratch and claw.
Yeah,
a lot of people have gotten to 48, 49 to Arlen.
You're right.
But the 51 was hard. 54 is a heck of a win.
It really was.
But then you would think that that would entitle Sestak to some kind of honeymoon. But instead, he's, during the campaign, as a way to prove what an outsider he is and that he's not a Democratic insider or a political insider, he said, and this, by the way, was a weird way to prove that you're not a political insider, that the Obama administration offered him a job in order to not run against Arlen Specter. Well, it turns out it wasn't directly the Obama administration. It was his political mentor and his former boss, President Bill Clinton, who came to him with some kind of an offer of some kind of presidential commission.
And boy, hasn't that I mean, have you seen, now look, you've covered how many big stories in your career. This took place, the offer last August. It came to light in February on a Philadelphia cable show, Larry Kane, Voice of Reason show, as you well know. It had a moment in February and early March. Then it dropped off the horizon. Now, Peter, week after week after week, it's a story that won't end. Why?
Because President Obama's poll ratings, as you know better than any man in Pennsylvania, are underwater in this state. He is unpopular in this state among swing voters, among conservative Democrats, independents, and what I'll call moderate or southeastern Republicans don't like President Obama the way they did a year ago. And so by tying Sestak to a political deal involving President Obama, they take some of the shine. And because right now, Sestak ought to be riding this wave. He ought to be, I'm the guy who knocked out 30 years of old-style politics. He said he literally ran his campaign against the way politics in the state and the nation have been conducted in the last 30 years, which happens to be Arlen Specter's Senate career. But instead now, he has he went and did this to himself, by the way. This is not Republicans who dug this up. Larry Kane said, asked him a question. He said, the Obama administration tried to get me out. Well, this is self-inflicted, just like...
Let me ask you this question, however. I agree. But doesn't this seem to hurt the White House more than it hurts Sestak? I mean, Sestak didn't take the offer. It's true it sort of, people will look at this and say, well, why haven't you come clean? Why haven't you told us everything? Why did you wait months and months? Don't you think that's
something? He keeps dribbling it out. You have to make a decision in politics, what you're going to answer and what you're not going to answer.
That's true.
One of the things you have to give Ed Rendell and Tom Ridge, as different characters as they are, they both decide what they're going to talk about. Now, with Rendell, it's almost everything. And Ridge, it's less.
Yes.
But they would either talk about it or
Right.
not talk about it. If you ask Rendell about something on Monday and he doesn't tell you, he's not going to tell you Tuesday or Wednesday or Thursday.
Okay, before...
Sestak's made the mistake of...
Stringing it out?
For 3 months, he clammed up. Now he decided he had to deal with it, and it's just this incremental stuff.
We're going to break. Is it a net... Is this a plus or a minus for him moving forward?
Small minus.
A small minus, but you don't think this is going to be decisive when we get down to the real issues of the campaign?
Oh, no, you're talking about a guy who Pat Toomey, the Republican, is a guy who thinks that George Bush was a feckless financial liberal, and you have Joe Sestak, who thinks that President Obama has basically the right solutions.
All right.
That's what this election is going to come down to.
All right, we're going to jump into the governor's race with Pete DeCoursey after these words.
This broadcast of Pennsylvania Newsmakers is presented by the Pennsylvania Chamber of Business and Industry, the statewide voice of business, and by the Pennsylvania Cyber Charter School, bringing educational innovation and freedom to the children of Pennsylvania. This broadcast of Pennsylvania Newsmakers is presented by PAConstructionJobs.com. For more information about rewarding careers in the highway construction industry, visit PAConstructionJobs.com. And by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business.
All right, Pete DeCoursey is here. We're talking about the U.S. Senate race. We'll get to the governor's race. Peter, let me ask you this question. I think if there's a middle to run, Joe Sestak is a 100% Obama man on the votes. He may have his trouble with the president. I don't think they personally like each other. On the other hand, Toomey is about as conservative as you get, maybe similar to Rick Santorum.
On the votes.
On the votes, yeah.
Not personally. He comes across
personally.
very stolid and conservative and calm personally in a way that Santorum seemed bouncy and aggressive.
I got it. Great point. Now, is there any middle left to run to?
No.
How are they going to run to the middle?
This is going to be a race where the winner is going to be like Bob McDonnell in Virginia last year. Bob McDonnell is an out-and-out fiscal conservative. What he did was persuade Virginia voters that fiscal conservatism was the way to restore jobs and bring jobs to Virginia. Either Joe Sestak will convince people that they need the health care bill, that they need the stimulus package, that they need this extra spending, or Pat Toomey will convince people that they'd be better off without it. But you're going to have either a fairly hard right solution like McDonnell's, presented by Toomey, that will win, or, I mean, this is really a referendum. This is an unusually nationalistic election in Pennsylvania.
And this will be followed as though it's a microcosm of the national debate.
Absolutely. If Pat Toomey with Bob McDonnell-type policies, George W. Bush, much more conservative than George W. Bush policies, can win in Pennsylvania, it is absolutely a bellwether for what could happen in 2012.
All right, I'm going to turn to the governor's race. I'm telling you, we're caught up in this big debate with Tom Corbett right now and these subpoenas for these Twitter accounts, his constitutional, Tom Corbett, in case you're alive and well in our state, is the Republican nominee.
And the Attorney General.
He's the Attorney General. He's a Republican candidate for governor. Won an easy victory. Later shows we'll get into the business with conservatives in his party. Give us a quick overview of the Dan Honorato, the Democratic candidate, Tom Corbett race.
I think it really comes down to my surprise, I thought this was going to be all about jobs. I thought this was going to be a very similar kind of race to what we're seeing in the Senate, where each side would say, here are my policies, here's how we're going to bring jobs. Instead, what we've had is this rolling debate about reform. And you have Dan Honorato trying to outflank an Attorney General who's indicted 26 or 27 House members and staffers in two of the caucuses, Republicans and Democrats, on reform.
Do you think reform is eventually going to dominate the campaign?
Well, you know what they say, scheduling is message. You look at Dan Honorato, he has had 5 press conferences / events since becoming the nominee. He has attacked Tom Corbett on reform issues in all 5, and hardly ever mentioned the word jobs after spending the entire primary saying jobs was issue 1.
But the voters care about the economy.
They do, but I don't think the voters, I don't think that there is enough difference of what they're willing to say about what they're going to do about the economy.
They don't want to get specific about taxes.
Honorado's not going to talk about taxes, and Corbett is certainly not going to say which $3 billion of the state's spending he's going to cut yet.
So you think they're going to be very general about the budget, and the only thing they can get into detail about, specifics, is reform?
Well, I think there'll be other things. I mean, in all fairness to Honorado, if you look at his website, he's got, I think, 50 or 60 executive orders he's going to sign on day one. I don't know how he's going to have time to greet his family on his first day as governor, because I think they're just going to have to put him in a room and he's just going to sign like 100 things with all these executive orders he says he's going to sign. He's trying to make Corbett come to his level of specificity. The other dynamic here is that Honorado, when unprepared, can make mistakes, as we saw this week. Corbett, however, has a good Irish temper.
More disciplined.
But he has a good Irish temper, and what Honorado is trying to do is get as many debates started as soon as possible so he can annoy Tom Corbett publicly.
There you have it. Pete DeCoursey weighs in on the governor's race. But it's off and running, and I think it's all summer. All right, financial reform bill. All that you want to know about this, you got to hang in here. What does it mean to you? That's coming up after the commercial break.
This broadcast of Pennsylvania Newsmakers is brought to you by Pennsylvania Credit Union Association. Pennsylvania Credit Unions, where people are worth more than money. To find a credit union that is right for you, check out ibelong.org. And by the Energy Association of Pennsylvania, Pennsylvania's energy information source. This broadcast of Pennsylvania Newsmakers is presented by the State System of Higher Education. 14 state-owned universities. The state system is the largest provider of higher education in Pennsylvania. And by the Hospital and Health System Association of Pennsylvania, working towards a healthy Pennsylvania.
Hi, welcome back to the program. Well, I'll tell you what, the financial regulatory bill reform bill is moving its way through Congress. Joining me to chat about it is Mike Wishnow. He's sitting right across from me, frequent guest, Senior VP, Pennsylvania Credit Union Association, and Rick Wargo, another frequent guest. He's the Executive VP and General Counsel. You guys, your titles are too long. We got to get these shortened. All right, look, Rick, moving through Congress now, they hope to get this done very soon, is the most significant regulation of investment houses and banks since the New Deal. Am I right about that?
That's absolutely correct.
All right,
this bill
now,
is massive.
We're sitting out here. We got all our viewers. Why should they care about this? Give me 3 or 4 reasons about why they should care about this.
A viewer or consumer should care because when this is all done, how it shakes out will inevitably change how the consumer deals with their banking institution, be it a bank, a credit union. How they deal, potentially how they deal with their insurance company, and how they deal with their broker, investment advisor, anything and everything.
So now hold on. No, this is a point that's not been made. I haven't heard this mentioned at all. We're not talking about something on the sidelines here. We're talking about, all right.
Where I was going was anything that smells like a financial service is in for some type of re-regulation or some kind of adjustment.
All right. Well, let's sort of go through some aspects of this that it will be most important. Consumer protection.
Well, yeah, there's a big consumer protection portion of the bill. Must say that there are 2 bills at this point in time. There's the Senate version and the House version. In both versions, there's the creation of a consumer protection agency. One has it as a standalone agency. The other one has it as an office within the Federal Reserve. But this consumer protection agency,
what would do?
It's going to get a lot of new powers to regulate not only existing regulated institutions like banks and credit unions, but a whole slew of companies that offer financial services.
Does that mean lending practices, interest rates?
Yep, all that stuff. Lending practices, and it'll also include a whole lot of unregulated entities that do loans or buy here, pay here's or any of that stuff, right, Rick?
Correct. What the vision for this Bureau of Consumer Protection, or whatever its name is going to be, a lot of people might be familiar with the Consumer Product Safety Commission. One vision, it's not the exact language in this bill, but one vision was that financial institutions, whatever they were, credit union, insurance company, whatever, would literally offer up your product to this commission where they review it and say, is it safe enough for consumer consumption?
Mm-hmm. And is it priced fairly?
Is this a result
Correct.
of the investment? Obviously, everybody's aware of AIG. We're all aware of the of all the fraud and deceit that went on. Is this an effort? But look, this wasn't mostly the banks and credit unions in a state like PA. I mean, this is basically brought about by too big to fail investment firms. No?
Well, there is some language in there with too big to fail. But I think that some of the mortgage products and some of, when you talk about what really started the financial crisis was the mortgage-backed securities stuff. Some of these products, like no documentation loans, like extremely low down payments, reaching down to folks with really low credit scores, all of that stuff is wrapped up in this.
All of that took place in the late 90s and early part of the new century when, in order to encourage homes, people, I mean, let's face it, investment houses or mortgage folks were literally giving mortgages to just about anyone just to get them on, then selling the mortgages to somebody else, and everybody splitting a piece of the pie.
Well, that's a good point. The toxic assets that you see that phrase in the newspapers, they are circulating out there. And not only did that wind up in private label in investment houses, but the biggest portion of what's known as the secondary market, the biggest recycler of mortgages, Fannie Mae, Freddie Mac, have those in their portfolio as well. That's what made the problem so systemic.
But they're not regulated by this, correct? Not by this bill.
Correct. That's been one of the biggest debates. Why aren't Fannie and Freddie in the mix?
All right, we're going to break. I hope this is helpful, but boy, this is going to affect every one of us. We'll be back with a discussion of the financial reform bill following these words.
This broadcast of Pennsylvania Newsmakers is presented by Highmark Blue Shield, changing the way health plans work for business with a variety of plan options for employers and more choices for employees. Information is available at highmark.com. Have a greater hand in your company's health. And by the Pennsylvania Healthcare Association, the future of long-term care.
Welcome back to the program. We're talking about the financial reform bill that's wending its way through Congress and why that's important to you. All right, look, as everybody knows, that merchants have to pay a fee for the use of a credit card, and then we know what happens to prices as a result of that, and that's something, without getting into the details, Michael, called the interchange. Why should anyone out there care about that?
Well, because interchange is the backbone of the payment systems that we know. And we have the convenience of walking into a store and swiping either our debit card or our credit card. And all of a sudden, magically, we walk out with our items. The merchant is paid, and that payment is withdrawn from our checking account if it's debit, or put on our credit card.
Or savings, right.
Yeah, or savings or whatever.
Okay.
Now,
so we all do that. Everybody out there does that.
Yeah, absolutely.
Now, there's a fee.
Well, there's a cost to that, right, Rick?
Right. I mean, you're talking about the luxury, if you will, of having that convenience. There are overhead costs for the card issuing financial institution. There's overhead costs for the card networks. And we also understand there's overhead costs for the merchants as well. We understand that. And the debate around interchange is...
What should the fee be?
What should the fee be?
Now, the fee gets paid by the merchant. Who pays the fee?
Well, merchants pay fees to the networks to participate and receive cards. Financial institutions also, there's a swap of fees as well. And, you know, the pitch or the problem in this bill is government is trying to say, well, we're going to come in and be the policeman of fairness, and they're overlooking things such as it's the financial institutions that carry the risk of fraud. Those things are woven into the fabric of interchange so that the consumer, if there's a hiccup with their credit card, they're all familiar with zero liability.
Right.
Those kinds of conveniences
So the financial institutions pick up the cost of that.
Oh, absolutely.
Yes.
And so what you're concerned about is that the government will get into this and, quite frankly, mess it up so that extra costs will have to be absorbed. And then, let's be honest, the consumer will ultimately pay for it somehow, some way.
Sure, sure.
I mean,
yeah.
Go ahead,
I
Michael.
mean, if there's any kind of shift in the payment, in other words, if the merchant pays less, more than likely the consumer is going to pay more.
Yeah.
If the financial institution has to pay more than likely the consumer is going to pay more.
Well, let me ask you this, and this is unrelated to the interest rates that you pay when you use a card, right?
Oh, completely unrelated.
So there's two separate things that are going on. You pay an interest, and you came on and cautioned people about to check their cards because there were going to be big spikes, and boy, there were big spikes in some of the interest rates. That's separate from this charge that the merchant has to pay, which also gets passed along to the consumer. Do I have this at all right?
You're on the right track, but essentially the interest rate on the card, that's reflecting the credit risk. What the consumer needs to look for, if interchange gets regulated in an unfavorable way, consumers should anticipate if they didn't pay an annual fee on a card before, might the institution assess an annual fee? You're essentially going to be looking for, modest to medium-sized fees to overcome that revenue stream.
Yeah, or some of the rewards may go away. I mean, we all like our rewards. I know I have one where,
and then you can get
air miles or whatever.
Yeah. Yeah, and also some discounts on purchases.
Right.
And you get, maybe you can buy some stuff. I guess now you guys are all in this business. A lot of people using those today. They're pretty common, aren't they?
A lot of people use rewards. A lot of people use air miles. A lot of people use,
we use air miles.
money off of gas. A lot of people use money towards buying a card.
I mean, obviously, whatever the point system is, purchasing gift cards with them, but the consumers like their loyalty rewards.
Yeah. Okay, we got about a minute left. So give me a quick, why should consumers care about this? I always keep coming back for our viewers. Go ahead, Rick.
Regulation of interchange can cause some consumer confusion in terms of you reopen the issue of what cards are going to get accepted where. Right now we have universal acceptance. This can cloud that and create some other confusions in the terms and conditions of cards.
All right, well, here, you're going to get the final word. When this bill, which we think will pass by the 4th, at least, who knows with Congress these days, but you're going to come back in July if this passes and explain this to us. All right, thanks for watching this edition of Pennsylvania Newsmakers, and as always, stay well.